Alrighty, gonna get started. Let me just pull up the broader indexes first, and then we'll get right into it, into the two sector analysis that I highlighted in chat. So, like I said the other day, NASDAQ now pushing up for the full retest up to this orange line, so it looks really strong. Mega cap NQ stocks just continue to kind of break out, follow the trend line, pushing this up into the corner. This up here is going to be a key point. If we break out here and then move up into the corner, then we're going to see massive moves on pretty much everything here. You would see a move kind of up into the high 16,000 range if we get this breakout. What we need to be careful about here is the rollover, and then it's definitely possible because you can kind of see the cup and handle formation here. So this would be the cup right here, and then you get that drawdown for the handle. So I need to be cognizant of that. But if we get green and then kind of a little sideways action here, want to go heavy long. So as the NASDAQ approaches this 13,900 number, just need to be careful on positions, because I'd say it's probably pretty likely that it does this. So that's the NASDAQ. Dow Jones looking strong as well. Now this is getting into the overbought territory. Angles keep increasing here. So it still hasn't gone, call it parabolic yet, but I'm still looking for that move into the 36,000s here. So could see that in the coming weeks to months here. We had the drawdown in March. Dow Jones not nearly as impacted as NASDAQ, and now we continue to chug along. So looks pretty good across the board. Let's start off in the ad tech industry. So Acuity Ads, this is just a smaller, it's called Demand Side Platform. They're based out of Canada. And they're making some claims about just the efficacy of their ad tech solution. So this is one that just came up on kind of one of my hedge funds' radars. He brought it up saying, hey, do you have coverage on Acuity Ads? Said, not really, and haven't heard much about them. But after that first guy mentioned it, then a lot of people started to pick up on this name. CML Viz Pro, which is an ex-hedge fund. Yeah, so saying it's 14,000-ish on the NASDAQ, where we need to be careful, because that would be the full retest, and you don't know if you're going to get the breakdown or breakout. So just need to exercise caution at that level. So going back to Acuity Ads, CML Viz is an ex kind of technician, statistician at a fund. Started his own shop, and this is one of his top small cap. I guess it's a mid cap, so one of his top mid cap ideas. Kind of a fringe name. Not a lot of people know it, but those that are in and embedded within the advertising technology ecosystem are hearing Acuity pop up more and more. Give me 1 second. Trying to find the question. I'll look for the question throughout here, but there was something about Acuity and just how they were positioning themselves in the market through their platform. It's called Aluminum, and just kind of at the cusp of programmatic advertising. Programmatic advertising is automated buying and selling of ad space on publisher inventory, and Acuity is one of the key players. Programmatic obviously seeing a significant uptick throughout COVID, so all these ad tech companies have kind of gone through the roof. So Acuity here, in terms of kind of technical positioning here, it is in this wedge here, descending wedge. It broke through this 1250 mark, unfortunately, but it is holding up kind of in this 12 range fairly fine. Let's see here. It did break that support a bit, so really do not want to see it much lower than 1175. If we get that NASDAQ push into the corner, this should run. Very strange action on this yesterday. Up big pre-market and then just steep sell-off here from top of the blue resistance. So if we get the NASDAQ strength that I think we will here, this should kick back up, and that's truly the move that I'm looking for, at least to 18, and then I'd probably shed a decent amount of it. It's possible that it can go up here, but would exercise caution as soon as it gets up to this 17.8 mark. Cardlytics, I mentioned this on the stream the other day. This one looks really good. Kind of ripe for a turn here. False breakout there, but it looks like it wants to push through this resistance and then kind of make its way up here. At least a $20 move up to this kind of 135 mark. They do partner with the credit card companies, and they have a bunch of just consumer data that marketers leverage for targeting, getting consumers here. So a lot of positive feedback from advertisers that are leveraging Cardlytics, and it's a pretty unknown name. Not too many people follow it, but those that are aware of the story know how good of a company it is. This had to have been an idea within one of the hedge fund discussion boards, because when we initially started hosting stuff around Cardlytics, there was just a tremendous amount of interest across the board. That was probably back here in the 50s. Mid 50s when we first started covering it, and since then just a massive surge. Peak was 160. Always been positive on this one, like it. So in terms of positioning today, looking for it to break above this blue resistance line. Gonna add an alert here. Probably want to chase this one. Just a fast mover. Chart looks good. Say in terms of like resistance, there is some here at 135, but if it can get through that, then it's going all the way back up to 150. So those are kind of the target levels here on Cardlytics. Real nice. CRTO called this one down here at 15. Was picking up commentary that their core business, which is retargeting. So retargeting is, if you go to Nike.com, you're going to have a Nike ad that follows you across the internet, across all the publishers and websites that you go to. You'll see a Nike ad where there is ad space available. That's retargeting. Tracks consumers based upon cookies, which are eventually going away. But given the surge in e-commerce transaction growth due to COVID, retargeting budgets have just gone through the roof. So in the near term, that kind of created this spike out of this wedge here and really just shot up, skyrocketed here. Now, because it's based on the cookie, Google has made it clear that they are going to remove cookies some point in 2022, hence creating a ton of disruption to Critio's core business. The magnitude of disruption still fairly up in the air, but if you look at all the publicly traded ad tech companies, Critio is probably the worst positioned in the crosshairs here. So what they're trying to do is pivot their business to replicate Trade Desk, which is a demand-side platform. Critio has a lot of shopper data just because they're plugged into all these e-commerce sites. So they have a massive just shopper graph, which is all of their data points that they captured over the call it last decade. So they're trying to pivot into a smaller trade desk that is focused within retail specifically. The new segment of their business that they're highly focused on is called retail media, and they're partnering with all of the major retailers here. So just on the technical pattern here, I would say short term you may see this push to 41, but need to exercise a lot of caution here once it gets up there, because I would say it's probably prone to that versus going all the way up to 48 here. Just need to monitor the story a bit more and see kind of Critio's comments in terms of how they're going to approach the loss of the cookie, because it is detrimental to their core revenue driver of their business. DSP, Viant Technologies, that's another demand side platform. So the ticker fits the business here. So new IPO crushed with the market weakness in March, lost 50% of its value, and now it looks like it's on support. This one looks pretty good. Let's see. Yeah, see, it's right on support here. If you just keep a tight stop loss, call it at 40, high 41s, or call it mid 41s here, this is a pretty good risk reward setup here. If the market's going to turn and these are going to turn higher, given that it's on the support line here, I think it's a good play for a bounce. So this is definitely another kind of short-term trade idea here. It definitely looks better than Acuity there. Magnite, this one hit. They're all a little bit weak. But when these things go, I mean, they explode. Look at Pubmatic the other day. Thing just shot up through the roof. Magnite is the behemoth in the space. They are a sell-side platform, so a trade desk is the demand-side platform. They service ad agencies. They're on the buying side. Magnite's on the sell side, meaning they service publishers first. So their customers or partners are the Yahoo, Barstool Sports of the world. What they're essentially doing is taking the I'll just show you real time. So what a Magnite is doing, see this ad space over here on the right, so this pink Whitney, so this theoretically is blank. What Magnite will do is connect to Barstool's website. It will say, oh, Barstool has an available ad slot here. It pulls it through its exchange, and then it communicates with the demand side platform who has a buyer. So the Magnite's going into the exchange, and then a trade desk is bringing a buyer to the table. Just like the automation of the stock market, you have the automation of the advertising industry. So that's how it all works. Magnite's the #1 scaled SSP. There's a thing called supply path optimization, SPO, within the ad tech industry. And big CPG retail buyers all kind of piling in on SPO. What that means is, hey, the Unilevers, the PNGs of the world, they want to have their ads running in brand safe environments. They don't want their ad brand to be running against any extreme content. So essentially, supply path optimization means a consolidation of kind of ad tech vendor suppliers within kind of large CPG or retail companies. So this essentially, in short, what that means is scaled players, the largest ad tech companies, are going to benefit because the biggest media buyers in the world are going to consolidate their spend to, say, 4 or less providers. Magnite is a supply side platform, and they're the largest by far. They have, so this was the old Rubicon. Rubicon acquired Teleria. Teleria was a massive video player. They rebranded to Magnite Inc. Magnite Inc. is now the largest inventory owner, or they don't own it, but largest inventory connection hub of connected TV. Connected TV has absolutely skyrocketed during COVID-19. Just look at Roku stock thing, I believe tripled throughout COVID. So Magnite's true point of differentiation is all the touch points they have within connected TV. Given that linear TV, so traditional TV that you see on the wall, had a lot of disruption in 2020 from lack of live sports and then the lack of entertainment programming. Movie studios had to shut down because they couldn't produce. So a lot of people cut the cord and moved into CTV ecosystems. That benefited Roku greatly. If you look at the viewership eyeball numbers on Roku, there's a massive surge. The ad dollars didn't necessarily follow at a one-to-one clip, but now you're getting that delta being closed here in 2021. So ad dollars tend to follow eyeballs and where there's scaled audiences, so seeing a greater acceleration of ad dollars into Roku and connected TV, that's going to benefit Magnite here. So they just made another acquisition of SpotX to further expand their video capabilities. So this is just a massive winner at scale. It's sitting on support here, multiple layers of support, strong support here at 40, which is essentially where it's at today. So 38 to 40, strong support. Like this a lot. I'm probably going to double down on this. Just really believe in the company here. They should benefit from those iOS 14 IDFA changes that I alluded to before. So this is a fast mover. At a bare minimum, should be looking at a move to 53 up here. Call it 52 to 53. So I feel fairly comfortable loading the boat here. Likely going to do that tomorrow. Pubmatic, same thing as a Magnite sell-side platform. You can see there's a little valuation gap. Magnite's 2x Pubm, but rightfully so. Much bigger scaled player here. So Pubmatic sitting on support here. Got to be careful. It did shoot up the other day. Massive move, 17% in one day. Off of what? It's a good question. No idea. Maybe just technicals, but very strange that it jumped that much. Now it's on support here at 54. Just need to be careful of a breakdown. Definitely a possibility that this rolls over, given what happened the other day. So no real comments there. LiveRamp. Now this is a pretty good risk-reward setup here, which is why I like it. May come down here back into the kind of 49.50 range. So I'm going to see what happens here. Let's see where the support is right here. And it is on support, so let's see what happens here. If it crosses down or proves to turn on that short-term support there, just going to add this to my watch list. I do like this one fundamentally. The issue with that is holding this one down is it's a very, very complicated ad tech ecosystem here. But essentially, Google, they're removing cookies and they're trying to replace it with their own solution. It's called Google Federated Learning of cohorts, acronym FLOC. If you look at the recent sell-side reports, they're saying that FLOC flock will not allow third-party alternative IDs to replace cookies or integrate within Google. Essentially, one of LiveRamp's main kind of growth levers here in a cookieless world is their thing called Authenticated Traffic Solution, ATS. That is supposed to replace cookies as an alternative ID and be a huge growth lever for LiveRamp. If Google's going to threaten and remove access to some of the third-party IDs, then the LiveRamps and Trade Desks of the world do have some issues with just adoption outlook around their IDs. Mixed commentary from the sell side in terms of level of impact, so I'll post all of those within chat today, and you guys can kind of read them, form your own opinions. I do think kind of the risk of Flock and their ability to kind of eliminate third-party access within the Google ecosystem likely won't happen. Regulatory concerns. If you look on all the media publications, you look at Google Flock GDPR, it's actually not even compliant right now. So they might run into some issues here because of their just privacy hurdles. So do you think this is a fairly good position to add for the long term? You can see it came off of a 90.88 peak here. Just going to wait to see what it does tomorrow. If it proves to show some green, then I'm going to go in it for at least a day trade, because it should bounce off the support. If not, looking for the rollover into 49. And then Trade Desk, obviously they're the #1 programmatic player by far. Programmatic has just skyrocketed. You can kind of see the ABC peak, so it's trying to get up here to 864 again. So look for this to break out. I'm going to create an alert here. What has driven Trade Desk growth is they also, like Magnite, focused on CTV, and CTV explosive growth. So that is why this has gone from 100 to went to almost 1,000 there. So this is a really good setup here. Look for this to break out. Trade Desk fast mover, multiple kind of 10 plus days when it starts to break out above resistance. So like this one for a short-term trade idea if we can get some NASDAQ strength and see this move up here. So call it around 680, $10 move up. It's a probably good trade for a breakout. Just don't want to see it roll over here. Alright, so that is the ad tech industry rundown there. Those are all of the major publicly traded advertising technology names. Skipping like the behemoths, Salesforce, Adobe. So what I would do here on Trade Desk is probably keep it right there. 670. So I'd probably put my stop loss at 670 where it's at now, and just hope that it just held the short-term support line. Maybe 665, and then really just look for this breakout here above that resistance here. So that is Trade Desk. On to travel. Obviously value laggard play. So Airbnb here trading within this. It's kind of it's essentially flagging here. So you have kind of your flag stick up, and then you have the flag within here. Now it's moving to the upper resistance line within the flag. So whatever this is here, $10 move, is what you're looking for on Airbnb short term. And then you need to see if it's going to break out and extend. Definitely possible, but also possible that it breaks back down into the bottom of the channel. So just need to monitor it here. I mean, this is a ridiculous valuation. which is why I'm a little bit cautious on Airbnb. But for some reason, the market is holding it up here at these elevated levels. I mean, that market cap is absurd relative to like a Booking, who does a ton more revenue than them. So just need to be careful here. What Airbnb has going for them is vacation rentals are the strongest segment of travel today. People would rather stay within vacation rental homes versus hotels, less exposure to other people in the public. So if you do checks with any vacation rental owner, they'll say, hey, business is popping off, and rightfully so. So while the backdrop to their business is very strong, just some valuation concerns here that the rug can get pulled at any second. So just need to be careful there. But first, you want to see a move to 202, see what it does there, how it reacts, and then your next move would be up to 220. Amadeus, this is a GDS company. They are predicated on corporate travel demand. So arguably, or not arguably, well known that it's the weakest segment of travel. You have transient travel, which is like consumer, and then you have corporate, group, MICE, corporate, business, group, just large groups, and then MICE is meetings, incentives. I honestly don't even know the CE part, but regardless, corporate travel, obviously COVID has permanently changed corporate travel programs, corporate T&E programs, etc. So this one has been punished quite a bit. The good thing is, I mean, they do have a hotel arm as well, so they're not strictly hospitality solution division, so they're not completely exposed to corporate travel. They do have some transient exposure as well through some acquisitions, but short term, looking for a move to 79 here, and then I'd be careful. You can kind of see that's almost an evenly spaced ABC peak right up top here. Let's see. Yeah, almost perfect there, which always is, when you see kind of similarly spaced patterns, usually means that they're going to complete up there. So looking for the C move up to 79 here on Amadeus. Booking.com, another online travel agency, behemoth, just continues to perform here. Coming up to, so it's at that resistance right there, based upon just how it's positioned here. It's probably going to go up into this higher linear degree. So you're looking for, this would kind of translate to what you see in the broader index, but looking for a move up here into the high 2000s. They are exposed to European travel markets, so I mean, this has gotten bought and back probably faster and more sharply than it should have, but if the market's willing to buy it, then so be it. So Booking looks good up to 2.8. CCL, cruise operator, one of their big itineraries is up in Alaska. Unfortunately, Canadian government restrictions and something within the U.S. called the Jones Act. Jones Act means that if you deport from a U.S. port, that you need to touch one international port. So if you deport out of California, you need to touch a Canadian port before going to your destination. Why that is, I have no idea, but it is something that I've learned. So that is why the cruise operators have threatened, okay, CDC won't put out the right regulations to allow us to resume travel, we're just going to depart from Bermuda ports, i.e. not regulated by the CDC, and that's why all of them have, or at least RCL, Royal Caribbean, has announced that they were going to start departures and voyages out of Bermuda. I believe the CDC has issued new guidance, so allowing these guys to resume departures, I believe, in July 1st. So, improving outlook here. Alaska does represent a couple $100 million revenue segment for CCL. So, this is probably the worst position right now, just because of that fact. But if you're playing the long game and you can handle drawdowns and you're just going to wait for 3 years, it's still a really good stock to own. DESP, this one is a Latin America OTI. So LATAM is definitely a poorer country, so there is some risk there. But the thing with these guys, so they're competing against the behemoths, Booking.com and Expedia, but they have a very localized offering within like Brazil, and essentially these guys allow consumers to leverage a ton of credit. I think you're allowed to put up to like 10 credit cards per trip. So that's pretty much how Brazil operates. Just poor, so leverage a lot of credit. Right here, it looks like it's going to bounce here and continue back up to at least to this 17 level. So this is probably a good spot to have this one. On the weekly, it's holding support right here. Let me just draw it out for you. Just give me 1 second. This channel's not even right. So it's holding the support fairly well. I would say it's a pretty decent entry as long as you just keep your stop loss low 13 so you don't see any rollover here. I would probably just put it at 13. It's a good one to just play up to the corner. Expedia, pretty much, yeah, I haven't touched this one in forever. It's going up to this 215 mark. Expedia, obviously, the other large OTA outside of Booking.com. Expedia has VRBO, which is their vacation rental segment. VRBO is differentiated from Airbnb because they have more destination market inventory and suburban exposure versus an Airbnb that is skewed more towards urban areas and city locations. So VRBO has a lot of whole home inventory, meaning you rent out the whole house. Like I said before, vacation rental is really hot, so this one just continues to chug along. People that I speak to think that VRBO unit is significantly under monetized within Expedia holding company, so potential for them to spin that out and create additional value for shareholders. Hilton Grand Vacations running into resistance here. As long as it holds, so you just need to see it hold this 36 support, which it's going to try to do. This is, so HGV is the timeshare division of Hilton. So I would potentially wait for this to pull back, although it is breaking out. Let's see. Yeah, I mean, it's a pretty clear breakout there. So you may see the rollover. Here, wait, let me put this right there. No, it came back and tagged the support. So this looks like it's just going to head up to this 47 mark. It may come back into $1.50 before heading up, but looks like it's going to retest all-time highs. HLT is Hilton Holdings. That is obviously the hotel division. Alright, my computer's bugging out right now.
Oh shit, here we go again. So Hilton, I can just tell you what it's going to do real quick, and then I'll post the charts. Going to head up to, call it 165-ish, into peak overbought. Same setup on Marriott. So Marriott's at a, call it, peak right now. Trying to break out here. Looks really good. If it can break out, it's going to run up into the 210 area. So Marriott just looks incredibly well. It's pretty much at an all-time high. These big brands are just going to continue to perform post-COVID, so like that one a lot. But that is full coverage on ad tech industry and then some travel names there. So kind of gave you a view of the charts, but definitely a lot on the fundamental side as well. Yeah, I'll be putting the charts in Discord, but you can kind of see how I think about all these and the approach to all. So hopefully that was helpful to kind of run through fundamental positioning on top of the technicals. And I'll be doing a lot more of these in terms of just sector overviews. I think it's helpful to see kind of all the leading companies and how they stack up against each other. All right, I'll see you guys in Discord.